Smart professionals rarely underinsure. They overaccumulate. I once reviewed a family paying 840,000 pesos every year for something they believed was protecting their future. That amount turned out to be just their annual insurance premiums. That's already decent annual income for a mid to upper middle income Filipino in their 20s, early 30s. And yet, in that case, it was simply what they were paying every year for insurance. Now, here's the part that surprised them. I personally pay about 5 to 6% of that amount for my own insurance, and I actually have more coverage than both the husband and wife combined. And they genuinely believed they were doing everything right. They had multiple policies, they were paying substantial premiums, and they felt responsible for protecting their family. But the issue wasn't income. The issue was how their policies were put together. What I see most often among high earners isn't underinsurance. It's ending up with too many insurance policies over time. A policy bought early in a career, another policy added when income rises, another plan recommended later, and because each decision happens at a different stage of life, no one ever steps back to look at how everything fits together. So the portfolio grows, the portfolio bloats, and the structure and design behind it, if you can even call it that, never really evolves. Now, if you're starting to wonder whether your own setup might look something like that, it may be worth reviewing it carefully. If you want a simple framework to walk through that process, you can comment audit. We'll share access to the Insider's Insurance Audit Playbook, which shows you how to review your policies step by step so you can see clearly what you actually have. Anyway, let's talk about where the overpayment usually hides, because it almost never looks obvious. Overpaying for insurance usually hides in three quiet places, and once you know where to look, the pattern becomes surprisingly easy to recognize. First, the coverage is small relative to the premium being paid. Someone might be paying a large annual premium, but when you compare the benefit to the cost, the efficiency simply isn't very strong. The numbers don't work the way most people assume. And if you're not sure about your own policies, a simple question to ask yourself is this: if I look at my total premiums for the year, do I actually know how much coverage that money is buying? Many people don't. Second, the policy mixes investing and insurance in a way that quietly absorbs value through charges and fees. The plan might be presented as doing two things at once, protection and investing, which sounds elegant, but the coverage often ends up thinner than it should be, while the investment portion takes years before it meaningfully works in the client's favor. So another useful question is, if my main goal is protection, how much of my premium is actually going toward protection? Most people have never seen that breakdown clearly. Third, the setup slowly accumulates additional riders and extra policies over time. Each decision may have made sense in the moment, but when you step back and look at everything together, you often find a stack of policies rather than a clearly designed system. And a simple reflection here is, if I listed all my policies on one page, would I immediately understand why each one exists? For many, the answer isn't obvious. And that's where the real issue starts to show up. When you see many policies together, it can feel reassuring. It feels like protection is increasing. It feels like progress. But quantity is not the same as thoughtful design. What looks like safety is often just complexity. This is also where many high earners fall into a mental trap. When you're used to buying quality things, the more expensive option often feels like the better option. If you buy a more expensive car, you usually get better engineering, more comfort, and better performance. So the instinct becomes, more expensive must be better. But insurance doesn't work like that. I often tell clients, don't treat your insurance like a car. With cars, more money usually means more value. But with insurance, less is often more. More expensive plans often include more features, more riders, and more moving parts, but not necessarily better protection for the cost. So when I review these portfolios, the problem usually isn't irresponsibility. The problem is that decisions are made one policy at a time. Each purchase felt logical in the moment, but no one ever stepped back to ask, does this entire setup make sense together? And when that question isn't asked for years, people can quietly end up paying far more than they realize. Here are three questions that can quickly reveal whether your setup is a stack of policies or something more intentional. First, if your income doubled tomorrow, would your insurance setup actually improve, or would the inefficiencies simply become more expensive? Second, if your income stopped tomorrow, would the protection clearly support your family, or would you simply realize how expensive the structure had become? And third, perhaps the most revealing question, do you know how much protection you're actually getting relative to what you pay in premiums? Most people don't. Not because they're careless, but because the setup was never explained clearly in the first place. Overpaying for insurance rarely happens because people are irresponsible. It happens because accumulating policies feels responsible. Buying another plan feels like increasing protection. Adding coverage feels like progress. But when policies accumulate without thoughtful design, the cost quietly grows with them. And over time, that can redirect a significant amount of capital away from your other financial priorities. But serious professionals don't just accumulate protection, they design it deliberately. And when protection is designed properly, something interesting happens. The insurance portfolio actually becomes simpler, not more complicated. Fewer policies, clearer purpose, much stronger coverage relative to the cost. In the next video, I'll show you what that kind of clean insurance portfolio actually looks like. And once you see it, it becomes much easier to recognize whether your own setup is working the way it should. I'll see you in the next episode.